Imagine this. You find the perfect apartment. Great neighborhood. Affordable rent. You fill out the application. You have a stable job. You've never been arrested. You've never missed a rent payment in your life. 24 hours later, the landlord calls. You've been denied. No explanation. No second chance. Just a simple, crushing no. How does a landlord in New York, or a bank in Texas, or an employer in California, people who have never met you, decide in seconds that you are not trustworthy? The answer isn't a person. It's a ghost. A 3-digit number you never see, calculated by a secret algorithm you don't understand, controlled by 3 companies you have never voted for. Welcome to the credit score industry. Today we are exposing how 3 private companies became the silent gatekeepers of the American dream, and why your financial life is actually just a rental agreement. To understand how we got here, we need to go back to the 1950s. Back then, credit was local. If you wanted a loan, you walked into your neighborhood bank, shook the manager's hand, and he judged your character based on your handshake and your family name. But in 1956, a small tech company called FCRA had a radical idea. What if we could replace human judgment with a mathematical formula? They called it the FICO score. Banks loved it. It was faster, it was cheaper, and they didn't have to deal with the awkwardness of saying no to your face. But here is where the trap was set. In the 1980s, the government deregulated the banking system. Suddenly, 3 giant data collecting companies, Equifax, Experian, and TransUnion, started hoarding your personal information. They didn't ask for permission, they just bought it. From your credit cards, your phone bills, your mortgage companies. By the year 2000, the trifecta was complete. They didn't own the banks, they didn't own the money, they owned the gate to the money. And if you wanted to pass through that gate, you had to play by their rules. Most people think a credit score is just for getting a credit card. That is dangerously naive. Today, those 3 companies have expanded their empire into every corner of American life. Want a job? 60% of employers now run credit checks on applicants. They claim it shows responsibility. But the reality? A single medical bill on your report can cost you a 6-figure career. Want to buy car insurance? State Farm and Geico don't just look at your driving record. They look at your credit-based insurance score. A drop in your number can raise your premiums by up to 50%. Want to rent a home? In competitive cities, landlords won't even look at your application unless your score is over 700. You could have 3 times the rent in cash in your bank account, but if the computer spits out a 680, you are homeless in the system's eyes. Even turning on your utilities, water, gas, electricity, requires a deposit if your score is too low. You are literally paying extra money just to live in America because 3 private bureaucrats decided you are risky. This isn't a financial system anymore. It is a social credit system built by corporations, for corporations. So, how does the math actually work? The formula is simple on paper. 35% payment history, 30% amounts owed, 15% length of credit, 10% new credit, 10% credit mix. But here is the dirty secret. The system doesn't judge your ability to pay. It judges your ability to borrow. If you pay off a car loan early, the system might punish you for lack of credit mix. If you close a credit card you don't use, your utilization ratio spikes and your score drops. Even worse, 1 late payment, 1 mistake of 30 days, stays on your report for 7 years. That is 2,555 days of financial purgatory for a single oversight. But here is the scariest part. The data they use is a mess. A study by the Federal Trade Commission found that 1 in 5 Americans that is 45 million people, have a potentially damaging error on their credit report. You could be paying for someone else's debt. You could have an account opened by a family member with your name. And when you call Equifax to complain, good luck. They are legally allowed to do nothing until you sue them. This brings us to the cruelest part of the industry, the poverty tax. If you have a high score, the banks fight over you. They offer you 0% APR, cashback rewards, and low interest rates. Money is cheap for the rich. If you have a low score, you are forced into the subprime market. Payday loans at 400% interest, secured credit cards with annual fees, car loans at 20% interest. The poor pay more for everything. They pay more for their car, more for their house, and more for their insurance. The three gatekeepers aren't just judging you, they are transferring your wealth upward, keeping the lower class trapped in a cycle of debt just to survive. So, is there any hope? Can we fight back? Yes, but you have to know the legal loopholes. Thanks to the Fair Credit Reporting Act, you have the legal right to dispute any inaccurate information. And get this, the credit bureaus have only 30 days to investigate your complaint. If they don't respond in 30 days, they are legally forced to delete the item from your report. Millions of Americans have boosted their scores by hundreds of points just by using these rules. But the bigger question remains. Should three private companies have this much control over our democracy? The credit score industry has turned the American dream into a video game where the rules are hidden and the high score determines your freedom. But knowledge is power. Now that you know the game, you can play it. Check your reports, dispute the errors. And remember, your worth as a human being is not defined by a 3-digit number generated by a machine. Thanks for watching. If you want to take back control of your financial future, subscribe and hit the bell. The system is rigged, but now